Welcome to the market opening bell on Thursday, October 2nd, your 10-minute guide to the stock market. On Tuesday, the final trading day of September, Hong Kong stocks rose, propelled by technology stocks. The Hang Seng Index opened 51 points higher, climbed steadily, and peaked with a 265-point gain at 26,888 points, ultimately closing up 232 points or 0.9% at 26,855 points. The X-share index increased by 101 points or 1.1% to 9,555 points, while the Hang Seng Tech Index advanced 141 points or 2.2% to 6,465 points. The market saw a total turnover of 314.9 billion Hong Kong dollars. Southbound funds poured a net 15.48 billion Hong Kong dollars into Hong Kong stocks, with significant purchases including 3.629 billion in Alibaba, 1.433 billion in Tracker Fund, 1.055 billion in Xiaomi, 934 million in Hua Hong Semiconductor, 622 million in Kuaishou, 613 million in SMIC, 466 million in Meituan, and 101 million in Horizon Robotics. Data shows southbound funds have been net buying Alibaba for 28 consecutive days, totaling 78.983 billion Hong Kong dollars, and Xiaomi for 3 consecutive days, totaling $2.656 billion. Throughout September, Hong Kong stocks exhibited a volatile yet upward trend, with the three major indexes repeatedly reaching new highs. The Hang Seng Tech Index surged 13.95%, significantly outperforming the Hang Seng Index, which rose 7.1%, and the X-share Index, which gained 6.8%. In the semiconductor chip sector, boosted by positive developments, Hua Hong Semiconductor soared 48.7% and SMIC climbed 31.5%. Sectors like gold, copper, wind power, lithium batteries, and photovoltaics also recorded substantial gains. Large-cap tech stocks performed robustly, with Alibaba jumping 53%, Baidu rising 49%, JD.com gaining 17.6%, NetEase advancing 11.5%, Kuaishou increasing 13%, Tencent adding 11.2%, Xiaomi growing 2.2%, and Meituan edging up 1.75%. In China's A-share market, the three major indexes opened high on the last trading day of September, but fluctuated. The Shanghai Composite Index closed at 3,882 points, up 20 points or 0.5%. The Shenzhen Component Index ended at 13,526 points, up 47 points or 0.4%, while the Chinex Index finished at 3,238 points, barely up by less than 1 point. Combined turnover for the Shanghai and Shenzhen markets reached 2.1833 trillion yuan. The renminbi central parity rate against the US dollar was adjusted upward by 34 points to 7.1055. China's official manufacturing PMI for September rose to 49.8, surpassing market expectations of 49.6, up 0.4 points from the previous month, signaling continued improvement in manufacturing activity. The non-manufacturing PMI dipped to 50, down 0.3 points, slightly below the expected 50.2, sitting at the critical threshold. The composite PMI edged up to 50.6, a 0.1 point increase, remaining above the threshold and indicating sustained expansion in business activities. China's S&P manufacturing PMI for September climbed to 51.2, beating expectations of 50.2, up 0.7 points month on month. The S&P Services PMI slightly declined to 52.9 from 53, still outperforming expectations of 52.6. The S&P Composite PMI rose to 52.5, up 0.6 points month on month. In the automotive sector, Leapmotor led new energy vehicle makers with September sales breaking 60,000 units for the first time, reaching 66,657 vehicles, a record high, up over 97% year-on-year. Xpeng delivered 41,581 vehicles, a new monthly record, up 95% year-on-year and 10% month-on-month, with year-to-date deliveries reaching 313,196 vehicles, up 218%. NIO delivered 34,749 vehicles in September, a monthly record, up 64.1% year-on-year, with year-to-date deliveries totaling 872,785 vehicles. Li Auto delivered 33,951 vehicles, trailing Leapmotor, Xpeng, and NIO. BYD sold 396,270 new energy vehicles, down 5.5% year-on-year, but up 6.1% month-on-month, with overseas sales of 71,256 vehicles, down 11.8% month-on-month. Its year-to-date sales reached 3.2601 million vehicles, up 16.4% and 18.6%, achieving 70.9% of its adjusted annual target of 4.6 million vehicles, still short of the 75 target completion rate. Geely Auto sold 273,125 vehicles in September, up 35% year-on-year, with year-to-date sales of about 2.17 million vehicles, up 46%. Its Zeekr brand sold 18,257 vehicles, down 14% year-on-year, with year-to-date sales of 143,600 vehicles, up 1%. Great Wall Motor reported September sales of 133,639 vehicles, a 23.29% increase year-on-year. Cumulative sales for the first 9 months reached 923,358 vehicles, up 8.15% year-on-year. September sales of new energy vehicles totaled 45,961, up 22.6% month-on-month. Cumulative new energy vehicle sales for the first 9 months reached 278,463 vehicles. The Macau Gaming Inspection and Coordination Bureau announced that September gross gaming revenue rose 6% year-on-year to 18.289 billion Macau pesetas, marking 8 consecutive months of year-on-year growth since February. Gross gaming revenue for January to September totaled 181.341 billion Macau pesetas, up 7.1% year-on-year. The U.S. government shut down on Wednesday, but investors anticipated a short-term disruption with limited economic impact. U.S. stocks rose for 2 consecutive days, with the S&P 500 hitting a new high and closing above 6,700 for the first time, up 22 points or 0.3% at 6,711 points. The Nasdaq gained 95 points or 0.4%, closing at 22,755 points, while the Dow rose 43 points or 0.1%, ending at 46,441 points. The Nasdaq China Golden Dragon Index, reflecting Chinese stocks, climbed 124 points or 1.4% to 8,759 points. For the entire month of September, the S&P 500 rose over 3%, the Dow gained nearly 2%, and the Nasdaq surged over 5%. Nvidia rose 2.6% on Tuesday, pushing its market capitalization to $4.53 trillion, becoming the first U.S. company to exceed a $4.5 trillion market value. Tesla climbed 3.3% on Wednesday, with founder Elon Musk's net worth surpassing $500 billion, making him the first person in history to achieve this milestone. Lithium Americas surged 23% after the U.S. government confirmed it would acquire a 5% stake in the company. However, bank stocks declined, with Wells Fargo dropping over 3% and both JP Morgan Chase and Bank of America falling over 1%. Sportswear brand Nike announced after Tuesday's close that its first quarter revenue reached 11.72 billion US dollars, up 1% year on year, exceeding market expectations of $11 billion. Earnings per share were 49 cents, for far surpassing the expected 27 cents. The stock rose over 6%, though the company cautioned that its turnaround efforts are far from complete. The quarter's gross margin fell 3.2 percentage points to 42.2%, dragged down by US tariffs and higher discounts. Sales at Nike's own physical and online stores declined, while sales through external retailers increased. The Converse brand saw a 27% revenue drop. CFO Matthew Friend noted that Nike's recovery is not expected to be linear, as different business segments will recover on varying timelines. On the economic front, U.S. job openings in August rose by 19,000 to 7.227 million, slightly above the revised 7.208 million for July, and in line with market expectations. The Conference Board survey showed U.S. consumer confidence in September fell 3.6 points to 94.2, down from 97.8 in August. ADP reported a 32,000 job cut in private sector employment in September, compared to a revised 3,000 job loss in August, marking the largest employment decline since March 2023 and the first consecutive 2 months private sector job cuts since the 2020 pandemic, against market expectations of a 50,000 job gain. The US ISM manufacturing PMI for September rose to 49.1, up from 48.7 in August, slightly above market expectations of 49, though it remained in contraction territory for the 7th consecutive months, hitting the highest level in the current downturn cycle. The US S&P Global Manufacturing PMI for September fell to 52, consistent with its preliminary reading, but down from 53 the previous month. Our stock pick today is Tianqi Lithium, stock code 9696. Tianqi Lithium Corporation is a new energy materials company centered on lithium, with its core business spanning key stages of the lithium industry chain, including the development of hard rock lithium resources, production and sale of lithium concentrate, and the production and sale of lithium chemical products. Its main products include lithium concentrate and lithium chemical products, widely used in end markets such as electric vehicles, consumer electronics, new energy storage, drones, glass, and ceramics. The company is one of the few global players with a strategic presence in both high-quality lithium hard rock mines and Salt Lake brine resources. It leverages the Greenbushes lithium spodumene mine owned by its wholly owned subsidiary, Talison, through its controlled subsidiary, Winfield, in Australia, and the Yajiang Cuola lithium spodumene mine in Sichuan, China, owned by its controlled subsidiary, Shenghe Lithium, as its resource basis. Additionally, through investments in a stake in SQM Chile and a partial stake in Shigaze Zhabuye, Tibet, Tianqi has secured access to premium Salt Lake lithium resources, namely the Atacama Salt Lake in Chile and the Zhabuye Salt Lake in China. The Greenbushes lithium spodumene mine is the world's highest grade and largest operational lithium spodumene project. According to the latest exploration results as of December 31st, 2024, Greenbushes has total mineral resources of 440 million tons, with an average lithium oxide grade of 1.5%, equivalent to approximately 16 million tons of lithium carbonate equivalent, LCE. Its reserve total 172 million tons, with an average lithium oxide grade of 1.9%, equivalent to about 8.1 million tons of LCE. Greenbushes is also the world's largest lithium mine by output, expected to account for 13.7% of global lithium resource project production in 2025. The mine operates 4 production plants and 1 under construction, with a current lithium concentrate capacity of approximately 1.62 million tons per year. The third chemical-grade lithium concentrate plant, currently under construction, is expected to be completed by December 2025, increasing total Greenbushes concentrate capacity to approximately 2.14 million tons per year, further solidifying its leading position among global hard rock lithium projects. The Yajiang Chola lithium spodumene mine project, located in Xinwei Village, Murong Township, Yajiang County, Ganzi Prefecture, Sichuan, is part of Asia's largest pegmatite-type lithium spodumene mining area. The Jiajiga Mining District. Once completed, this project will become Tianqi's first domestic lithium concentrate supply source, enhancing its resource security and stabilizing its raw material supply chain, particularly for domestic lithium chemical production. In December 2018, Tianqi acquired a 23.77% stake in SQM, becoming its second largest shareholder. SQM holds mining rights to the Atacama Salt Lake in Chile, the world's largest lithium reserve by volume. With high lithium concentration, large reserves, mature extraction conditions, and low operating costs, making it one of the most advantaged salt lake resources globally. In August 2014, Tianqi acquired a 20% stake in Shigaze Zhabuye, securing a strategic foothold in China's Zhabuye Salt Lake. The Zhabuye Salt Lake, with proven lithium reserves of 1.841 million tons, is a large-scale, comprehensive salt lake deposit rich in lithium, boron, and potassium, with both solid and liquid resources. It's the world's third largest and Asia's largest lithium salt lake, with a lithium brine concentration second only to the Atacama Salt Lake, ranking second globally in lithium grade. Suggested buy price 44 Hong Kong dollars, target price $48.5, stop loss $41.5. I do not hold the aforementioned stock.